He's joining us live from Singapore. Jay, thanks very much. Great to have you with us here. Appreciate your time. You've been calling for caution now for 2 weeks. Markets are down. What's your view now?
Yeah, thanks for having me on the show, Prashant. Let's touch upon the global markets where you left. And like I've been saying, I said last week the 3184 high was the low, was the high. Or if not, the markets are going to make one more high to somewhere about 3213. The markets yesterday made a high of 3226 on the S&P futures and turned sharply from there. And so this is possibly signaling, the anticipated correction that I'm expecting for the U.S. markets to about 2850, 2800 on the S&P index. And the Nasdaq, like you pointed out, has actually clocked fresh record highs and actually closed 2% lower. And that is a rejection sign from the market. That usually when the market clocks record highs and reverses, that's what we call as a bearish outside day. And we got a bearish outside day on the market from a record high. That's not a positive sign. But given the structure, I've been positive on the Nasdaq right before the March 23rd bottom, and I said the index that hold above the 2018 low will clock record highs. I was probably the only one who said it on your channel first before the markets actually bottomed, and they've come to record highs. And in fact, I turned cautious last week on the Nasdaq too, and I took profits on my QQQ, the ETF tracking Nasdaq, and the market went even higher than that. So there is a lot of excesses built in the system. And coming to the Nifty, the reversal that I've been waiting for is actually taking hold only now. But still, there is a lot of work to be done by the bears. And if they want to take control, and they're likely to take the markets much lower, they need to break the important resistance at about 10,223. Also, 10,328 itself is an early warning sign that a larger correction is likely to take hold. And Reliance is coming off just near a very important resistance at about 1960. So that's a very important level for me. I think it clocked about 1944 or something yesterday, or maybe a little higher today. It's coming off from there. And so although it may not be a trend change, the Reliance has been single-handedly dragging this market up. And if it were to correct something like 1700 to 1600, that itself will contribute largely to the correction.
Okay, Jay, so on the Nifty, just to sort of capture that point completely, you're saying that your base cases we head to 10,223, is it? And yeah, over what time period are we talking about this?
I see. If the market is weak, we're going to get it, by the end of the week, or maybe even earlier than that. That's again a sign of the market. If the markets hold up the zone of 10,328 to 10,223, that's a sign of strength for the market. If the markets hold up, there's an alternate scenario. So this could actually extend a little more higher to 11,150 to 11,200 for the market. So be very alert. I know the markets can do anything and can surprise anybody. So be ready for the market. We want the markets to confirm what we are saying. We always look for endorsement from the market. You can have a view, but don't pull the trigger until markets endorses your view. So that's the way you keep your risk low. And right now, if you're turning bearish on the market, the yesterday's high is likely to hold and unlikely to go above that. But if the market goes and tests these supports and shows sign of holding up, like remember last time from a 10,553, the market came down to 10,195, and we saw only a 3-step decline. And we revised our view that the markets have got one more recovery high. So you want to be alert like that as to what the markets do. But my suspicion is that this market might go and break the low of 10,223 and go into a larger correction. But as I say, I'll say this one more time because that's very important. Wait for the market to endorse your view.
Okay, so stay nimble, stay alert, and keep watching the screen very carefully. I think that's the key takeaway, the key message that Bala has given us so far. Bala, now if this downside continues in the manner that you envisage, apart from Reliance, what else is going to be the biggest drag? We've seen banks starting to underperform last couple of days. What else is weak?
Yeah, there are two heavyweights that are actually looking vulnerable, Surbi. ICICI I spoke about, I think last week or the week before. Now I said it came down from 380 in a five-step fashion, and actually, it went back higher, closer to 380, and clocked a lower high at about 377 odds. And right now, in fact, as we speak, it actually broke through a very short-term trend line that sits at about 352. The fact that it's below 352, and if it does close below 352, it might be a drag on the overall market. It's got quite a bit of weight. Although SBI has got a very strong support about where it clocked at 145. I don't think that's under threat. You would recall in March, I said it's going back to test the 2016 low of 145. It did that and it's bounced back. But so far, the bounce is looking corrective for SBI. So if SBI were to hold up 175, 176, that will be bullish for the stock. But if it were to break 176, I think it'll probably go and revisit the May lows of about 145 and change. But I don't think the setup looks like that, but that's an important stock. Again, economy-facing stocks, Tata Steel, that's also looking a little bit vulnerable at the moment. Maruti and Tata Motors. These three could be the drags if the markets were to go down.
Okay, so some of these auto stocks, Maruti, Tata Motors, some of the big banks like SBI, ICICI Bank, that's a good list for us to work with. Are there any safe havens if the market's texture is to change? Typically, the risk aversion sees money moving back to the levers of the world, for instance. So, Jay, is there any need to think of those kind of, repositioning trades as of now? Pharma, FMCG, or even a name like Bharti for that matter?
Yeah, I think Bharti is undergoing a little bit of correction at the moment. It's probably going to do more sideways action or a little more choppy, lower kind of move fashion. But there are farmers remain in the bull market, and I've been bullish on pharma. The only sector I've been bullish on, I should have been bullish on IT too. I was a bit hesitant. But pharma remains in a great place. But as I pointed out last week too, the ideal place to get in will be about somewhere between 9,500 to 9,100 on the pharma index. And there are many stocks within the non-derivative space, which are outperforming the indices, and they may not be so vulnerable even if this correction that I envisaged comes through. And if the markets were to break through the 10,223 support, I think they would still outperform the market. So it's ideal to look out for such names and look at relative outperformers.
Right. Jay, you made the point a couple of times, and I want to emphasize that because the momentum has been so strong, right, on the upside, and you repeated it absolutely. I think necessary that wait for prices to confirm your view. Only act then, right? I mean, if the market were to open up another 100, 120 points, then you got to think of the alternative. That is absolutely imperative. Just repeat that for our viewers. I mean, what would negate what you're saying right now? What levels, if taken out on the upside, would negate the view that you put out?
Yeah, obviously yesterday's high is pretty important, Prashant, and above that the market opens up the levels of 150 to 11,200. But the difference between professional traders and amateur traders is that professional traders wait for the trade to come and fall on their lap. We wait for the markets to endorse our view. So in fact, I was negative on the market on last Tuesday itself, but the markets fell on Wednesday, but the market didn't go below the Wednesday's low. That's what we call a follow through. There are instances where you got to fade the market. There are instances where you got to wait for endorsements. That comes with experience, judgment. But simplest thing is to wait for follow through, be it on the downside or the upside. You want the markets to follow through. As you've been seeing for many days, people would have been brutally stopped out if they had been trying to trade this market, because one day the market was up, one day market was down. That's not the way. A follow through tells you the market is moving in a particular direction. As it's the axiom, one day doesn't make a trend, but 2 days do.
Okay, Jay, thanks very much. I wanted you to sort of emphasize that point, and I think it's good that you did. Appreciate you joining in and running us through what you make of the market at this point. We are down 176 points as things stand right now, and some profit taking absolutely very clearly on the screen. The Sensex is down about 600. We will slip into a quick break here. We will come back, get you excerpts of our exclusive conversation with Uday Kotak on the other side.